Hi, this is Jay Norris, author of Mastering the Currency Market. Welcome to the report. Before we get to the charts, I need to point out that trading futures and Forex is a risky endeavor and not suitable for all investors. The charts we're going to be looking at are real-time market snapshots and may not be replicated going forward. First market we're looking at is the Australian US dollar. Aus USD came right back today and made a new high all-time close for the contract. 102.85. You were actually in the 103 handle again. That's the second close we have above that that December high. So you're very, very close to a breakout here. We say you need 3 daily closes above a significant level, and if you get that tomorrow, I think you got plenty of room up above. Just for scale, look at the current channel you're in right now, and you can see that certainly looks to be the case. So we're pretty bulled up on the Australian dollar. We love it here. You know, we love a dip even more. It's one big bad carry trade market, one big asset class market. So we feel that with things starting to roll up for global stock markets, continuing higher, particularly the U.S. stock market, and with the U.S. economy starting to hold its own overall, take away that bad durable goods order last week, and things don't look that bad. Your retail sales numbers have been improving, and just you know, more good things than bad things out there on the horizon. Obviously, you shook off the terrible events in Tokyo pretty well, so all that points to higher asset class prices. Next market, the Euro US dollar. Continued indecision on behalf of the euro. Boy, it wouldn't take much to shift that daily back higher, though. It's either a bull flag or you're in some sort of a correction here. Either way, you know, I don't see this market going too far, straying too far from this line right now. So that's a pretty good support line. Overall, you're in a bull. You're definitely in the bull phase of the market right here. The last 3 months or so, or 2.5 months, you're very definitely in an uptrend, a bull move. So, you know, it wouldn't surprise me if things continue to move in that direction. The structure on the chart right here is this, the trend line right there. Weekly still up. You're, excuse me, still above the trend line here. The price pattern is still one of higher highs and higher lows. So until that line gives, I think it's safe to say your path of least resistance is still higher, despite the short-term direction on the daily pointing lower currently. But the price pattern there is going to trump that short-term direction. So higher on the weekly. British pound. Now here's where all the bullish dollar sentiment is coming from. Direct effect of the pound. You know, the Bank of England officials, we've been talking about it all along. They were talking tough. Merv King and company, they were talking about higher rates, and then they didn't do anything. And then the market came down. They talked, but it came to releasing minutes of things, and you know, crunch time, they didn't do anything, so the market came back down. And that's really what's been fueling the little bit of upside you saw in the dollar. So, you know, nothing's changed here. Short-term trend's down. You even broke the price pattern. You're just kind of sitting on the ledge here. So, you know, this is one that could tend to go either way. And it's probably one that could tear the euro down with it if it does go. Short-term trend lower on the daily. Short-term trend arguably lower on the weekly. And the main thing is you're breaking this price pattern. So I think if you get a close below that 160 even or so, that could open up more on the downside. For now, though, you know, you're sitting on 160 until you can get below that level, until you can close below that level. You're essentially sideways between 159 3/4 on the downside here. So you still have support. You're on support, and 164 on the upside. So you're in a big, essentially you're in a big 4-point box here, four-point line formation. So next market, we'll look at dollar CAD. We'll see if dollar CAD strengthened today in the face of a stronger yen and Swissy, and it didn't. Dollar CAD, they continue to lean on that. We've been saying 105 all along, and you know, every day it looks like it's warming up a little bit more to chip through this bottom. And if you chip through that bottom, I think 195. Speaking of chipping, you'd have a chip shot there, pretty close to it. So 95 overall at target, and we're going to stick with that. Weekly's arguably sideways, daily down, monthly down. The dollar chief. Dollar chief saw a little bit of upside today. You swung that 240 back higher, 240 higher now in the face of the daily. So daily 240 higher, that's going to green light day traders to work the long side. Let me just pull out my 240 line to make sure. Yeah, there you go. 240's higher. So when you have a situation where the daily's higher, the 240's higher, that means the long-term trends intraday are higher also. So that will be supportive for intraday traders playing the long side. Now let's look at the yen. You know, the show could be in the yen pairs this spring. We'd love to see it. We'd love to see some upside for our good friend, the yen pairs. Big up day in dollar yen. Yesterday we saw you finally got a close above this big benchmark candle there. That shifted the daily line higher. Looks like that daily line is going to shift higher again today. Look at that. You're moving on the weekly line. So, you know, we said all along when this bubble's going to pop, and when it does, that could mean a historic bottom, a long-term bottom in the yen, and I think you're very close to that. So you get a breakout above 84, and this is going to be the big show on the upside. Big show on the upside in dollar yen. There's a lot of players been waiting a long time for that, and I think you're getting close to it. You see the weekly chart there. So, boy, this is the big show right here. And if it does break free, continues higher, you're probably going to take the yen pairs with it. Hey, let's look at the U.S. stock market. U.S. stock market had it going again on the upside today also. You shifted that. The daily essentially remained higher, and you put an exclamation point on that today with the daily directional line painting today's low now is a significant level. So look at the slope to it. Look at the MACD there. The MACD, your lagging momentum indicators passing up through zero. That's signifying intermediate term trend shift. So it looks like it's back on the upside for U.S. stocks, and that will probably be favorable conditions also for this budding rally we're seeing in the yen pairs. Hey, let's go to dollar index and see what happened there. I was talking with some of the boys about the possibility of both a strong dollar and a strong stock market, and you're kind of seeing that right now. What I really care about, I'm not so enamored with the dollar index, is I'd like to see a strong stock market and stronger yen pairs. Not sure how that would shake out for the dollar index. However, short-term trend on the daily dollar index is higher now. You see you have a definite pattern, though, of lower highs and lower closes. So you're going to have to break that pattern. I suppose there's a line, and there's a trend line. So if you can take those out, maybe towards the weekend, you're in a position to go for that white directional line, the weekly directional line there. So that'll be something to watch. Dollar index, I'm not so enamored with that, is the potential for higher yen pairs. That would be the show, and with dollar yen kicking that off. Hey, my name's Jay Norris. I wrote the book Mastering the Currency Market. Look for my next book coming out very shortly, another month or two, Mastering Trade Selection and Management, again with our good friends at McGraw-Hill. Thank you very much, and we'll see you back here tomorrow.